we thought autonomy was the end game, and it turns out it was just the beginning.
One, two.
Coming up, we're talking to the CEO and managing partner of Reservoir, Danny Bernstein. The Modern Acre podcast is presented by Ambrook. Ambrook for Farming provides production insights and tax prep in one place. Ambrook is modern accounting software built for growing farms that need to know their numbers. Track real-time profitability by each enterprise and make expansion decisions based on data, not just gut feel. To learn more, check out ambrook.com or hit the link in our show notes. Hey, Danny, good to have you back on the show.
Yeah, it's good to see you guys. We're all just, relaxing in our t-shirts on a Friday. Some unplanned fashion coordination, but it's good to see you guys for sure.
Casual Friday, it's a must. Recording a podcast talking about AgTech, got to do it. Danny, it's great to see you. I know there's been a lot happening in your world, and we're excited to unpack all that. Let's start. Y Combinator has been making lots of noise about AgTech in the recent weeks, which is interesting because AgTech is seemingly cool again. So did you see what's coming out of Y Combinator, and kind of what's your reaction to it?
It does seem like we're about to get that tourism moment again, I think, for sure. I hope it's more than that. And then the question is, like, how can we really engage these folks? We know that AgTech is undercapitalized. So if we're being serious, we'll be like, okay, well, AgTech's undercapitalized. So YC paying attention, Founders Inc. paying attention, that's a really good thing. We actually like the idea that a startup will spend, call it 50% of their time at Founders Inc., 50% of their time at Reservoir. We actually think that's cool. Get both. You get different things from different spaces. We hope that they do their homework and that it doesn't just sort of spin out. And so we've exchanged some emails with Y Combinator. And one thing we will do as it gets a little closer is we will make Reservoir available to those startups so they can just get on our farm and test. So we want to make sure that if this is going to be another sort of moment where San Francisco and Silicon Valley starts to pay attention to AgTech again, that it's more grounded. I've talked to Western growers about it, talked to John Deere about it, and we're kind of like, how do we make this work? Because gosh, we know that it could really not. And then all of a sudden it's AgTech's fault versus the approach. And we know a lot more than we did 5-6 years ago about the approach. Like, we've learned a lot. So how do we make sure that it works better?
Danny, it's cool to see you engaging. I think when we see these posts about Y Combinator, I feel like there's this reaction that it's like extreme reaction. Yeah. People are like, oh, like, we can't have Y Combinator involved. Like, this is our AgTech. And I totally agree with you. Like, we need that attention. And yeah, it could be tourist attention, but we need investment. We need other pools of capital, other resources, other ways of thinking. I think two things are true at once. That's true. And it's also true that Y Combinator probably doesn't have like a deep rooted understanding of agriculture and the challenges, but I think it's, to your point, an opportunity to come together to solve some of these challenges. And I think it's okay. I think it's okay that Y Combinator is into ag right now. And yeah, why can't we work together to take advantage for the ultimate goal of improving innovation in agriculture? So I think it's kind of funny to see the reactions. I'm like, guys, this isn't a bad thing that Y Combinator is paying attention here.
I think it's like a necessary thing. We have to bridge these worlds. We really have to tap into the deep tech dollars, the hard tech dollars, like the dollars that are backing defense startups, that are backing space startups. Like, we have to tap into those capital pools, and the opportunities are significant. So if we can create better bridges, like, one of the ways we think about Reservoir is, can we create a better bridge between Salinas Valley and Silicon Valley? That's one of the phrases we use. Not Salinas specifically, of course, because I spend a lot of time in other regions. But yeah, we really have to connect these worlds. And it has to work, I think, sustainably. Like, we want Y Combinator to have a big financial success in AgTech, because then they'll go after more. You look at a lot of these corporate portfolios, like Google Ventures invested in some companies from the previous vintage, but they didn't necessarily have Google Ventures like returns. So we get them to have a win, and then they will come back. We need that in the space for sure.
Well, Danny, it's been a couple of years since you've been on. We had you on when Reservoir was still an idea. You were kind of incubating the test farm and thoughts with the fund. So maybe just fill us up to speed on what you've been up to the past couple of years.
Well, yeah. First, I mean, I appreciate you having me on so early when Reservoir was a series of Google slides and a bunch of ideas. So that's speaks volumes about this community. Honestly, is that there is an openness to embrace folks like me. So fast forward to today, Reservoir is a brand that encompasses two companies. We have Reservoir Farms Inc., which is a C Corp that runs our incubators, and I can talk about that a little bit. And then we have a management company, which is separate actually, that houses the fund. And that's an LLC. The management company is structured as an LLC, and then the funds are these sort of GP LP combos. And so, a lot of the last year was figuring out, what is this company? What do we think it is today? What do we think it's going to be when it grows up? And then also figuring out the right way to structure that. And that's been a lot of learnings. I'll just speak to the C Corp. This is a C Corp that now employs 8 people. We have incubator leads in Salinas, in Sonoma, and actually now in the Central Valley as well, as we work towards soft opening in the Central Valley. The Reservoir Farms Inc. is owned by me and the employees. We actually have no outside capital that is on the cap table. It's fully owned by us. That could change in the future, but so far it's us. And we've been funded by essentially partnerships, or you could say customers. So a lot of folks will say your best funding source is your customers, and because that aligns incentives really well, and then we don't have to think about their returns. We can just think about delivering value. So we've raised over $8 million in catalytic capital for Reservoir Farms from John Deere, Western Growers, and the state of California. Those are the 3 primary funding sources. And so that now is a sustainable company.
That's the C Corp?
That's the C Corp. Yeah.
And so they are on the cap table.
They're not on the cap table. It's non-dilutive capital. So it's $8 million in non-dilutive capital. And it's and we, those are partners that we bend over backwards for. I talk to Western Growers, Walt, Ben, almost every day, sometimes multiple times a day. John Deere we're really tight with. And we kind of are co-creating Reservoir Farms together. We'll have more and more OEMs involved in the future, but they kind of have been that, seats at the proverbial table to think about, how do we do this? What's the right vision? What equipment do we need? What staffing do we need? And that's gotten us to a point where it was an idea even last year to doing a grand opening in Sonoma, doing a grand opening in Salinas, and now preparing for 3rd, 4th, 5th sites as well.
Makes a ton of sense. They get the benefit. You're really their outsourced R&D incubator working with startups, so they get all the benefits that come with having that access, that visibility on the ground. Is that kind of the pitch?
It's like, what's the deal? What's in it for them? Yeah, we want to create the highest impact AgTech sort of rugged AI incubator. And in order to do that, we need access to growers, we need access to expertise, we need access to equipment, we need access to, whether it's technical expertise at places like John Deere or Nutrien. And so forming partnerships around that is just like super natural. It's easy for incubators to get lost when they chase money. And we've just been like, we know what we do. And then we think partners will come. But we don't do any unnatural things with them. Like, we're not sharing confidential information about a company. We have a weekly newsletter. They get the same newsletter as everybody else. We just basically are in this because they see that AgTech will be healthier if Reservoir exists, and so they want Reservoir to exist. I don't know if there's a better way to put it. We're not doing anything with them that is sort of unnatural, secretive. Here's a secret file on a startup. There's just like none of that that's going on. It's all really above board, and we're kind of in this together to build something that can last.
And what's the long-term business model of the incubator? Can you walk us through that?
Yeah, sure. So I would say there's like 2 things that are clear, and then there's a whole world of unclear, but like fun and upside, I would say. So partnerships form a basis of our operating revenue. And so I gave you a few examples: Western Growers, John Deere, and there will be others in the future. So that's one category. The other category is that the startups have almost like a Spotify or Netflix subscription. They have a subscription to Reservoir. And we have now, I think, somewhere between 15 to 20 paying members. I just have to double check the latest. And those are paying either $3,000, $5,000, or $6,000 a month. So you can do the math pretty easily on that business line. Then what we're going to be doing actually there is, so the tiers are called residency, which means you have dedicated space at the farm. You're there every day. And then we have the second tier, which is called membership. And that means you can access the farm and you can reserve space, but you're not using it as your office. But you can access our network. We'll make intros for you. We'll help you with your deck, things like that. And then pretty soon we're going to announce a third tier, which is called associate. And that's actually going to be free. So, and part of this was actually inspired when we saw that Y Combinator was going to be creating a category around weed control and pesticide alternatives. We started to talk and say, we need a way. We'd already had this idea, but we said, we need a way that any startup project could come to the farm, regardless of how much money they've raised. We need that openness. And so we'll be announcing the associate tier next week or the week after publicly, like starting to market it. But folks around Reservoir kind of already know. And so a use case there would be a student team at Stanford. They haven't raised a round yet, but they need access to an acre of strawberries. They could come to Reservoir as long as they're insured and they could get on the farm. So that will be a pathway basically for more engagement. So we have partnership revenue, and then we have revenue from these subscriptions, and we think that can really scale. The third category is sort of like, where do we go from here? And so Reservoir will do, mid 7-figure revenue this year, Reservoir Farms. And so it's a healthy business. We're able to pay our folks on time, all the things you'd hope for. And then the question is, with that capacity, what do we start to layer on? And those are the conversations that we're having right now. I'll be super open about what those things are, and we're just trying to figure it out.
Super cool. Want to switch over to the fund side, the LLC business. Maybe talk to us a little bit about kind of your thesis, your mandate, who your LPs that you're targeting are, and kind of like what your approach is with company size. Is it seed stage, early stage? How are you thinking about the fund overall?
Yeah, it's been incredible learning, honestly. And so we did a first fund. I call it a prototype fund or a proof of concept fund. And we set out to raise 2.5 to kind of learn. We raised about 3. So that was just kind of learning. And then from there, we invested in a couple companies that have done really well. So FarmNG exited to Bonsai Robotics. TerraBlaster is doing really well. There are a few others that are doing well. It gave us a huge amount of learning. We met other VCs, we met LPs, we got feedback. And so what I like to say is that our proof of concept helped form our thesis, helped formed our fund, and it helped formed our team. And now we have myself and 2 other GPs. One is named Matt Hoffman, who ran the AgTech program at Driscoll's. His quote unquote day job is he runs Reservoir Farms. So all the incubator leads report to Matt, and he's also a general partner on our fund. And then the other one is someone we haven't publicly introduced yet. Her name's Nicola Kerslake. She's an Oxford grad. She is a total badass institutional investor, has managed big funds. She has the track record, the traditional VC track record, the traditional VC experience. She's formed funds. She's worked on hedge. She's done all these different things. And she's done a lot of work in industrial. And so Nicola and I really kind of run the fund day to day. Our second fund, I would say, is just a lot sharper than the first. And our thesis is around, we call it rugged AI, which is basically saying that AI is eating software. We're in a moment clearly around software-defined hardware and around generalized robotics. There's a lot of talk about physical AI. NVIDIA in particular is really beating the physical AI drum. We focus on a subset of physical AI, which is rugged AI. And rugged AI is basically AI for the hardest to automate jobs, the hardest to fill and hardest to automate jobs. And I think we can kind of confidently say that we predicted this because we started to build Reservoir Farms, 2 years ago, around building an incubator space for rugged AI. And now we can pair a fund with that. And so we've been studying rugged AI for a few years and in various forms for a very long time. And so our second fund is a rugged AI fund focused on software-enabled hardware exclusively. We view ag as the source domain. So ag is where you start, and you basically can go from one task, one crop, to one task, multiple crops, or multiple crops, one task. And then you can start to generalize further. You can go into multiple tasks, multiple crops, multiple machines, and then you can even cross into other industries. And so Bonsai Robotics is an example where we're on the cap table, and they began in ag. Then they started to work across multiple machines. They acquired PharmNG. They have even more machines now in form factors, and they're starting to win contracts in construction and mining. So this is a completely different version of AgTech, which is like AgTech, like we say, like your mother's AgTech was one crop, one task. And now it's multiple tasks, multiple crops, multiple machines, and even multiple industries. So all those TAM arguments about ag, rugged AI just blows them all up. And that's our focus.
I think it's really interesting. We talked about this at World AgTech, World AgriTech.
AgriTech.
All the nomenclature.
All the ags.
Exactly. We talked about this, and Tim and I were like, it was one of the most interesting things we heard during our time was just chatting with you about this thesis and the expansion into these other industries, and I find that really fascinating. And it's very niche, but I think niche with a strategy of extending out, right? And I'm curious, what did you think, whatever you can share about the Monarch deal? Because that was kind of interesting in that we know all the all the news about Monarch, but Caterpillar bought them, heavily construction mining company. Did you read the tea leaves there? Like, what were your thoughts on that? And I don't know if that's actually officially been confirmed by Caterpillar. So
it's a good question. I know it's sort of like official on the AgTech rumor mill for sure.
Yeah.
I mean, it's interesting. I think exits are good. I think transactional activity is good. This is good for the market. Movement's good in general. That's interesting. The acknowledgement that a company like Caterpillar or those sort of massive industry incumbents are getting acquisitive around software talent, I think that's really good for the industry. Just that signal that they look around internally and they say, gosh, what if we need more software talent in-house, more automation talent, more precision talent? I think that's really interesting as well. Jason Brantley, who runs the high value crop group at Deere, has like this epic quote, which is, we thought autonomy was the end game. And it turns out it was just the beginning, which is like such an epic, like boss quote, right? And so I think the idea that Caterpillar would turn around and say, hey, there's some interesting things happening with Monarch is an acknowledgement that for these industrial incumbents to compete at scale, to compete with China, to compete with startups, that they have to start to think about inorganic growth. And that's obviously really positive for our industry. I've been hearing that more and more from incumbents right now. We'd obviously like them to start to race around this. That will begin if startups on the software side, on the generalized robotics side, start to look disruptive. I'll give you a positive signal. I just participated as a judge in the Farm Robotics Challenge, which has been around for 4 years. And 3 or 4 years ago, it felt like a student competition. This year, it felt like a serious robotics competition. Here, the finalists were Cornell, Carnegie Mellon, UC Davis, Olin, Delaware. Like, this was serious. And I was part of the judging. There were 3 or 4 companies that easily could have been the grand prize winner. These are companies that have a working prototype with deep tech teams ready to go. The winner of the competition, Rootline, who we're going to invest in, is actually now applying for Y Combinator, and they've got a really good shot. So there are some things happening in the space now around software-enabled hardware. And I think an acquisition like Caterpillar, we hope that just sort of lights a spark and sets off a wave of inorganic growth.
All right, Danny, I feel like we see you everywhere. We see you at World AgriTech, at FIRA, you're at every conference, and you just decided you weren't busy enough, so you decided to launch your own conference, Ruggedize. Maybe talk to us about why you decided to do this.
Yeah, I mean, I just love throwing a party. That's really what it comes down to. So next time you guys are in town, come over. It's a great. So we're doing a conference at the end of August, and we studied the market before we decided to do this. So I would say that kind of like what happened was that we've been at FIRA. We kind of feel like we launched our company at FIRA. We love Fira. And in fact, we're going to be a sponsor when they're in Washington this year, and Mylan and that team are great. But with Fira coming out, leaving California, we felt like there was a gap and there was an opportunity. And in particular, it was not to recreate Fira here, or was not to recreate World Ag or World AgriTech. It was actually inspired by a conference I used to be part of at Google, which is called Google I/O, and actually just happened this week. And Google I/O is a conference that is deeply technical. It's application based. So you actually apply, you talk about your deep tech chops, and if you pass their muster, you actually get invited to participate. There wasn't a deep tech conference like this in ag outside of academia, where there are deep tech conferences where academics, postdocs, et cetera, will present their research, but it's not applied. So think of this like applied deep tech for ag tech, deep tech, rugged AI. That didn't exist. So we started to circulate this idea. We talked to the Fira team about it, so they weren't surprised. We talked to World AgriTech, so they weren't surprised. We like to do things like that. And then we talked to Deere, we talked to Andros, we talked to Western Growers. We just got a bunch of feedback, and we got good feedback. We said, yeah, this is cool. So we have a farm in Salinas. We have 40 acres plus our ranch, which is another 4 acres. And the idea basically is that we will set up a tent and we will have technical talks that will be inaccessible to somebody who is not technical. They will be not demoing machines that are commercial ready. They'll be talking about concepts that are under the hood. So Bonsai Robotics, for example, has developed a world model for their orchard navigation. They're going to talk about how they developed their world model. They're going to show screens that can actually show the world model. They may do a little bit of machine movement, and it will be the engineers who built the model and what tools they use, like what aspects of Gemini, what aspects of NVIDIA, et cetera. That will be the talk. And it will be only talks like that. We'll have basically 2 formats. One would be companies like Bonsai and Carbons. We'll have CEO of Carbon, CEO of Bonsai, CEO of Verdant, et cetera. They'll be doing basically talking about technical how-to or technical case studies. And then we're going to have the companies building the platforms there. We've announced that there'll be 2 speakers from Google, including the Gemini/DeepMind robotics team, which is pretty awesome. And we have more coming that we're just not able to confirm yet, but it will be the companies that are making the hardware stack, making the software-enabled hardware stack that is part of rugged AI. So just a different thing, and we're going to learn, and we hope to break even, and we'll see if we do it again next year.
Tim just isn't free that those dates. It's not because he's not deeply technical. Okay, it's he's busy. He's got other plans.
What's going on?
No, I think it's really cool, and I think Tim and I always have these conversations around events in ag and in ag tech, and I think doing something different is so important. And I think I really appreciate how you guys are being really thoughtful, and even the application component of it. It's on this niche topic. It's like you mentioned, very tech forward and digging into the technical details. And I think just super cool. So I'm excited to see how it goes.
It'll be interesting to learn. It kind of circles back around to this idea we talked about earlier, which is we're trying to bridge Silicon Valley with Salinas Valley better.
Yeah.
And so I'm really actually sending this to a lot of my friends in Silicon Valley, a lot of investors. And I'm kind of like, hey, I'd love to visit the farm. Great. Why don't you come on this particular date? Because you're really going to see some more of the deep tech underside of things. So I think there's more that we can do as Salinas Valley, as Central Valley, to bridge the worlds, where they can come and they can see content they're familiar with, and they can see that this isn't mechanization anymore. This is automation. This is robotics. This is precision robotics. We're post mechanization now. And this will be a conference that really demonstrates that.
Danny, as we finish up, I'd love to get your take on the state of AI more broadly and generally. What are you seeing in the market? Obviously, we're seeing massive investment in data centers and infrastructure, and this AI race as it's put, and players like OpenAI, Anthropic, Google, all competing here. And then we see what Elon's doing with SpaceX, which is a whole nother can of worms. What are you seeing in the market generally, and how do you feel about that flow down to rugged AI and the ag tech startups you're working with?
That's such a cool question. There are a few things right now that are top of mind for us. One is that the bar to build an investable software company has been raised exponentially. So all those pitch decks that are around farm management software, farm management software, farm management software, the bar is higher. We hear stories every day of farmers building their own ERP, doing it in Claude, doing their own integrations. That's amazing. That's empowerment. That's democracy. That's incredible. Like, continue on that for sure. And it just means that a software company that's out raising right now or out building or selling, they're going to have to make really clear why they have basically navigated a new trough of complexity. So if a grower can now build their own ERP with all the integrations that are available to them, they will eventually hit a wall. They'll hit a wall of complexity. Things will start to break. And what the new companies have to show is that they not only have gotten past that wall, but they have basically created an exponential difference in reliability, integration complexity, etc. And I think companies are still warming up to that idea, because we may still be at the point where the growers and the engineers are sort of familiarizing themselves with these tools at the same time. So if you look actually where Gary Tan is really spending his time, he's not really spending his time studying weed control and pesticides. He's spending his time looking at sort of personal AI and how he can become sort of this global expert on navigating that trough of complexity. And I would say that the companies we're seeing have not gotten over that yet. So that's, I think, one mega trend that we're tracking. The other is a couple of different types of companies we'll think will spin out. One that we're really interested in is that if you look at what OpenAI has been talking about with AI-related consulting, there's a form of sort of modernization or enterprise modernization that is going to be that is enabled by this AI era. And we're just starting to see what that looks like. And we're just starting to see what that means for AgTech in particular. But there will be a couple of winners of really interesting businesses that basically become a CIO consultant around data modernization in the AgTech enterprise beyond what the CIO can do themselves. And I speak to CIOs all the time, like Brad, who's the CIO of Taylor Farms, is freaking brilliant. And the kinds of things he's doing on his own right now are extraordinary. But to be able to go beyond his level of capability and look at data modernization as a service or really enterprise modernization as a service is a big deal. And there'll be some really important companies that come out of that. So we're watching it really closely. I'm obviously spending time on Claude myself, and I'm sure you guys are too. And it's just, I think, an amazing time to be doing that development, to be a small business owner, all these things. It's just incredibly cool.
I think that's a great place to wrap it. Danny, thanks for coming back on the show. This has been a ton of fun. As we close out here, how can our listeners get in touch and connect with you and Reservoir?
Yeah, easy. Danny at reservoir.co, not .com.
You got to get the .com. You got to get the .com.
I got to. It'll be 500K, guys. So we'll see. Maybe, in a few more years when we just like cruise into profitability. But yeah, easy to reach, and would love to hear from you all. And just, you guys are the best. And it's just so fun to reconnect with you, and let's obviously do it again in the future. I'm sure I'll run into you at some conference or some party or whatever, but it's just good to see you guys and keep doing what you're doing.